Good morning, everybody. It's Wednesday, March 26th, about 9 a.m. my time. Wanted to talk to you guys about market structure as well as some of the macro headlines and things that are happening behind the curtain, behind the scenes, and where I think we're going, right? For the next probably like up until May. I think the first 6 months of this year are going to look slightly different than the next 6 months, right? So I actually think the year is going to be broken up quite simply, like this, right? So let's just say end of May is marked right there, okay? I think we're going to basically have a choppy regime up until May, maybe even, June-ish, July, where we create a base. And then after that, this being the S&P 500, right? One of the more important things that happened in the S&P 500 is that we broke through this uptrend channel, right? Or sorry, this channel as well as this uptrend trend line. And this is particularly important because, you don't break something like this as an established, this has been created since January 2024, right? This is 1 year, almost a year and a quarter of an uptrend that has been effectively breached and broken quite significantly, right? It's not like we did this and this and this. We just swiftly broke it to the downside and we're not even able to recover anywhere close to the trend line. So going back to my original point, where does that leave us? I think that leaves us to an area where the first half of the year, like I said, is going to be probably, somewhat of a choppy, downish year, and it could look something like this. And maybe the second half of the year, maybe we begin our uptrend, something like that, all the way into, 2026. And then we break into new all-time highs into 2026, Q1, Q2, right? That's my general thought process. And part of that is because, if you start looking at, for example, Jay Powell, FOMC, okay, these are some macro related thoughts and headlines that are coming about. Let me see the latest. Okay. So last week we had the FOMC meeting, and basically, all signs from the Fed point to I had a really good post, but I can't find it now. Um, it was regarding the FOMC from last week. Let me see here. FOMC tariff. Oh, sorry, Jay Powell. I mean, I think all in all, the summary was that basically the Fed is not going to cut rates, right? And all the pressure that's coming about from you, and you could watch this, by the way, on federalreserve.gov. Watch it yourself, right? I watched it, I read the summary of it and everything. And so the point is that, as we see the tariff conversation coming about, right? Tariffs, the hell is going on? I cannot type today, guys. Sorry. Tariff. There we go. As we see the conversation coming about regarding tariffs, right? I don't think Trump is backing down. And that's their mandate that was given to them as part of the elected government. And they're going to keep and stay on that path, right? And they're going to charge Canada and Mexico and whoever the hell else that they want to deal with. Now, tariffs themselves are not necessarily a net good for the market because what it does is it brings down margins and it causes uncertainty, and it reduces, future forward guidance for earnings, right? And so that, in essence, again, ties to the original message of what I stated earlier, which is, we're probably going to be in the middle of another potential down leg, right? And how low we go is probably going to be, in my opinion, determined by number one, how swiftly the Fed maybe considers rate cutting, or how badly the tariffs themselves bake fear into markets and economy, et cetera, right? So all in all, I believe that the market is going to set up for another down leg, and that is probably going to be the first half of this year. So I think the struggle bus is probably till May, June, July at the latest. And then after that, like I said, right, like somewhere down here, we're probably going to create some sort of like base, and then 2026, I think we shoot up higher. Okay. Now, relating this back to BTC and crypto, here's kind of where we are, right? On a monthly basis, I think it's abundantly clear that we have stalled here, and not only stalled here, but it seems like we're reaching somewhat of a consensus view of markets want to take profit at the upper end range of this, 108 down to 100K level. Especially because, for example, like if BlackRock and funds and big money players got into the market, let's just say down here, you're really good, right? Like, I mean, you've definitely hit, an easy 5Xer in the last like year and a half, 2 years. Okay. If you got in somewhere around here, this little block right here, anywhere between 42K to about 25K, you've either hit a 4Xer or like a 2.5X, right? And this is, I think, where a majority of the institutional buying started to come in, from Michael Saylor to BlackRock to Morgan Stanley, right? Institutions really, really ramped up their buying here. I think they started to maybe take a little bit off the table here, but some doubled down, right? So even at this range, you're at, 59, 50K up to about 70K. Again, currently you're still up a nice 30, 40-ish percent or 25% if you really got in at the high range. Regardless, whether you bought in here, here, or here, and in my personal opinion, I think a large majority of the participants that were professionals and institutions like the BlackRocks of the world, I think they were really smart to get into one or all of these levels. And I also think that they're smart enough to start hedging. Doesn't mean they're actively selling, by the way. It doesn't mean that they're net short, and it doesn't mean that they're completely out of the market. I believe that they are cutting or hedging quite significantly here. And that leads me to that point of, what I mentioned, the S&P 500 potentially coming down with, BTC coming down. I think the first obvious area for BTC to come down into is probably somewhere down here. Okay. This is probably the most visible, strongest, level of support, which is, 58 to 60K, right? Let's just say 60K. 60K puts BTC from the local highs to this level. So let's just say 60K flat. That's a 44% pullback, right? In most bull markets, BTC has done that, right? Like BTC back here did about a 38% pullback, you know. Um, I mean, and even in over here, like it had quite significant 25, 27% pullbacks. If you go through this entire trend up, you'll find numerous, 20, 25, 30% pullbacks on the way up in 2016 and 17. Even this range, like if you, zoom in on, I don't know, like a daily level, I'm sure you'll find numerous like 25, 30% pullbacks. So the point I'm trying to make here is that as we look at the daily time frame, right, we are in effect on BTC particularly holding up stronger in terms of a structure better than SPX because SPX actually broke this 1 year uptrend. I don't believe that SPX is going to do this and have, let's just say, one more leg down while BTC stays here. I do not believe that at all. I don't buy it, right? I think Bitcoin is still a risk-on asset, and I think it's going to get sold down quite significantly in a very abrupt manner. And I think you'll see the prices sharply declining towards that 60K level faster than we can anticipate, right? Faster than most participants can anticipate. And so my next big level is, this little trend line right here. Some of these trend lines are like things that I've had on my chart for like, I don't know, a couple of years now, like 2022, I started these charts with these trend lines. And so that puts me somewhere around like if we start seeing a bottom, somewhere around 58 to 60K at the top of this trend line. Let me make this trend line more visible. Yellow. Okay. Let's make it like a 3x so you could see. Right. That trend line right there puts us somewhere around 56, 58K or whatever, right? That 60K area. Okay. Um, I think that's, entirely possible. But from the high, that puts us at a 48, approximately 50%, drop, right? And again, lines up with our time as well. So price plus time is a very good opportunity, right? So if we put it right there, that's the first week of May. That's again if we have a straight drop down. Okay. If we have, say, more chop from here, we do something like this, slowly grind our way down. Maybe we make our way towards 59, 60K by June or July in that kind of fashion. Okay. But nonetheless, I do think that the higher probability is, one more leg down. Okay. Now it's not necessary that it has to happen that way. Many things between now and then can change. Whether it's political tensions, Ukraine, Russia, Israel, Gaza, etc. If the world becomes more peaceful and tariffs are lifted, etc., obviously markets um, may rejoice, right? And rejoicing means like the bottom is put in sooner and markets go up higher faster. Okay. Connecting this to the dots of other altcoins, I think one particular major that has been really, really struggling for several years now is ETH, right? I mean, ETH has clearly been on the struggle bus for a little while, pretty much effectively sealing the top as a double top here in March 2024, December 2024, now breaking down from this double top. And so the double tops are sealed when typically, the way I see it, I like to measure double tops like this. I see the first top, the first bottom, and then the second double top, right? How much of like a measurement is that? Okay. So that's, approximately like, let's just say $1,800 worth. Okay. Um, I don't like to see like a percentage or numerical value. I like to look at it, a little bit of both. So let's just say a 47% drop with an $1,800 value, right? So from here, $1,800 value doesn't make sense. But, anywhere between a 40 to 50% drop does make sense. Okay. So now that we're broken from this double top, right? This range, uh, the 2100 low of this double top, and now breaking down, 40 to 48% takes us somewhere around like, 1000, 1100 approximately, which then puts us right in the strong area of support from 2017 to 2022 right here. All right. That would be huge. Okay. I think that is entirely possible for ETH, especially given, like I said, the structure of how S&P 500 is shaped and the structure of Bitcoin and my, thoughts on Bitcoin itself. Now, there's other sort of lower market cap assets which are, somewhat performing like impressively well. One of which I've spoken about numerous times, magnetics in our Discord, right? Private Discord. I've spoken about it in our video a couple of weeks back. I speak about it on my Twitter quite a bit. One, because it's a positivity coin, right? Like I think memes are probably done for a while, but like, if you go to their Twitter, the idea of like positivity, positive thinking, personal and financial freedom, etc. I mean, these are like really interesting ways of creating a brand and a marketing technique around something that Gen Z and millennials and pretty much everybody likes, right? It's a universally accepted, concept, right? It's a universally beloved concept. And so I think they have something really well. And obviously the market is rewarding them with that, right? Clearly, because you see that Magnetics is, currently trading at 27.5 million, while the rest of the market, even say something like Solana as a large market cap asset, is still struggling. Okay, so let's pull up Solana here, right? This is Solana on the struggle bus, broken its uptrend, potentially maybe another leg down. So point is, paying attention to outperformers is probably the best thing that you could do because um, they're paving the way for where the market sees, new assets going and new narratives forming. And so, you know, this is something that I want to be paying attention to. Even Store, which is, uh, the project that I'm deeply associated with, Solana Spaces, right? We are building literally a physical store that is connecting Web 2 and Web 3, right? We're trying to drive as much value into Store by showing people that, we want to build like physical retail stores, sell Solana-based, merchandise through our uniform platform for all things Solana related. And we want to connect that with the store token, whether it's things like RWAs and franchises, and other unique things that we're trying to implement in the store token. Regardless, the business is real, right? The project is real, the product is real, and the team is real. These are the kinds of things that you want to be focusing on. So, like I said, magnetics, store. And then my other favorite is T3 AI, which is under collateralized lending. It's a form of like, you know, credit lending, if you will, but more so taken out as borrow loans right through their platform. It's a really cool concept. Make sure you check it out. But the point is, find the winners and the teams that are continuing to build and find the outperformers, right? If you find both in one, I mean, you've clearly struck gold, right? And in my opinion, like these three are somewhat doing relatively better than like 98% of assets on Solana, like smaller market cap coins. But they're definitely doing better than like literally, most ecosystems and most projects that are listed, in these charts, right? They've held up better. They actually have an audience. They have, people involved in building real products. So I think, that's worth noting, right? It's worth noting and it's worth, considering, thinking about allocating your capital to. So that's how I'm going about it. Again, not financial advice, but make sure you do your research. These are my general thoughts on the market. Um, yeah, if you guys have any questions, make sure you check out my Twitter. What's going on here? Make sure you check out my Twitter. Send me a DM if you have questions. Check out, my charts that I post in my Discord. This is a private Discord. Feel free to join on the free side. And then if you have any questions or comments, drop them in the YouTube video below. All right, good luck, everybody. Take care.